Okay.
All right, so welcome everyone to how to plan for a virtual year. Obviously, pretty much no one, oops, I didn't mean to mute you, David. Pretty much no one knows what they're doing right now. So David has gone through and put together a presentation of things to think about when having a year that's going to be mostly virtual, and thinking about ways to plan for that and those curveballs that we're going to see going into the year. David is a past governor of District 3. He is a past chair of the National Council of Governors. So we're excited that no matter what, he stays around and can help us with all of our district budgeting needs. So David, I will kick it over to you and you can do a screen share.
All right, thank you. All right, can everybody see that okay?
Yes.
All right, great. So obviously this year is different. Normally at this time, we'd be talking about how to go through and setting up a normal budget, and we'd be using a lot of history and looking at trends and things like that. This year, everything gets thrown out the window. So this year, you've got to really be flexible and you've got to be nimble on planning for the year. So where do you start? You know, history is still important because it gives you some form of reference for what's happened in the past and sort of where you are today. But you also, you know, you've got to look at the current situation and adapt on that. It's now more important than ever to understand what your revenue and expense sources are going to be. You're going to have contingency expenses because, you know, in a year like this, something's going to be different. You just can't plan for everything on there. You're going to have to be flexible. This thing's going to have to change a lot, and so you've got to be flexible with what's going on and what's coming in and out of there. Contracts this year will become more important than ever. You know, usually at the beginning of the year, everybody likes to be very organized, so they'll go ahead and sign their ADDI venue, you know, all the conference registrations, everything like that. So now more than ever, you've got to look at what all your contracts say, because that can really have a big effect on what your expenses are going to be. Some venues are being more lenient than others in understanding. Others will do the letter of the law on there and will hold you to that. And if you don't have the event, you still end up having to pay certain minimum fees. And again, lastly, you're going to have to reproject monthly. This is not a one and done on doing a budget and saying, okay, I can check it off. Let's just move on with the year. So on our agenda today, we're going to talk about budgeting, maintaining flexibility, invoices, collections, taxes, insurance, event contracts, and then financial controls. Because even this year, all these things are still important no matter what. The important thing to always remember is the golden rule of finance is what you can't pay out what hasn't come in. So you've got to make sure you've got revenue coming in order for you to have expenses going out. So you start with what's our revenue going to be, and then you can figure out how much you can budget on your expenses. So remember the Benjamins. So in budgeting this year, what I recommend is go back and look at the past 2 years of history. Because one thing is, this past year wasn't a normal year either, because it got halted in the last 4 months of the year. And so you've got to go back and say, all right, let's kind of what was normalized 2 years ago and kind of compare those and understand what the differences are in there. And then I would create a column and just go through the adjustments. So for example, if you're getting ready to do a kickoff, if it's virtual versus in-house, if you have got your retreats and things like that, but virtual versus in-house, look and see what's different about that. Was there any revenue that could be coming in from that? That will not be coming in right now, or there are expenses that would have happened that may be different right now. So go through there to understand what those adjustments are. And then really, I would play around with 3 different scenarios this year. What would happen if we're in a virtual environment for the entire year? And how would that look as far as your revenue and expenses? I'd look at a virtual year, maybe until January, and see what goes there. And then sort of a hybrid year, where it may be, through September, or it may be through a different period of time where some events are going to be, You're going to do some live events, but maybe some of the main ones are going to be virtual that involve larger crowds. So take a look at those and play around with those. And by the way, if you have questions, feel free to ask them as we go along. So, what are our revenue sources? We've got membership dues. So, look and see that this year we got two different things going on. One, we got a pandemic, and two, we're going to have an economic slowdown because of the pandemic. So what effect is that going to have on dues coming in? So take a look at that. What's historical there? Do you think you're still going to have the same amount of people that they're going to be joining? Are you going to be able to maintain your corporate sponsors? And that's going to require a lot more communication to see where everyone's head is. So you can't wait around and just say, well, we're going to put a post up there and just hope people still continue to join. Event income. A lot of times there could be events from fall fundraisers, media auctions, art auctions, American Advertising Awards Gala, things like that occur. You've got to look and see, okay, historically, what have we looked at and what's different now? Are these going to be virtual so that we're not going to be able to charge what we did before? Or are we going to not be able to have it and do something different? Just for example, for the district for this conference right now, we had to go through there and say, okay, this is not normal like it was before. We're not going to have the registration fees that we did for everybody before that. So let's adapt and move it into there. Same thing with American Advertising Awards income. Look out from there, look to see what historically it's been, and then put your finger on the pulse of, do we think our members are going to submit as many entries this year as they did before? General sponsorships. Those are another key area. Have you been talking to them ahead of time to see if they're going to be in or not this year? I would recommend trying to get those lined up early, because as we get into the fall, and if there are any signs of an economic slowdown at that point in time, folks may be taking next year's budgets and cutting them down some. So go ahead and lock in your sponsorships as early as you can so you can go ahead and protect that income. Fundraiser income from other things, and then also things like NSAC entry fees, et cetera, like that. And then you look at and budget your expenses. So let's lay them all out. And you've got a couple of different types of expenses. You've got fixed expenses that are going to be there no matter what. If you are paying monthly fees for your accounting system, if you've got insurance and things like that, those are going to be there, and those aren't variable. Those aren't going to change based on the size of an event or entries or things like that. So go ahead and put those down and say, okay, we know that those are going to be here no matter what. And then with the other ones, you'll kind of play around on the revenue side. If you have an event and it's going to be 100 people, well, you've got your revenue you think you'd get from that, but then your expenses are going to fall in line with that based on there. So we've got American Advertising Awards judging and forwarding expenses that'll be there, national dues, scholarships, committee initiatives that you may have, event expenses, conference registrations, et cetera, along those. And there are always more expenses. So you got travel. And one thing, this year, obviously the virtual conference, you won't have those travel fees. So, there'll be something in there. The main thing is, as you're laying this out, make sure you have good notes about how this is different, because your successor is going to hopefully have a more normalized year. And they're going to be, if they look at history, they'll look at 2 years of, data that may not be as relevant. So you want to make sure you have good notes on why you did things so that whoever succeeds does that. You've got software expenses, professional and legal fees, tax returns, et cetera, insurance expenses, any type of supplies, things like that. Miscellaneous, there's always something in there that's not normal. And then I always recommend that you have like a 5% contingency fee in there, or contingency budget, because something's always going to show up that you didn't plan on. And as we know, this year, especially, we're going to see that. So as you putting this all out, if you do it on a spreadsheet or something, you're going to have to work the budget back and forth to make sure that your income is greater than or equal to expenses. And it's not a, it's a, you've got to play with it. It's not a science in there. It's an art to getting this in there. And you may, one of the things you want to do at the beginning is, what is the health of my club right now? Do we have a healthy balance? How many months of expenses do we have saved up? And look at it relative from there. I will tell you, one of the things we're doing in the district this year is that we did have a healthy surplus from last year. And so as part of that, we're actually investing back into the clubs this year by not charging district dues. So that's one thing that you look at, is the clubs won't have district dues this year. Now they will next year, so you'll need to have those notes, but we're not going to charge them this year. And so we're actually going to run a deficit to spend some of that surplus, because we really want to reinvest in the club area on that. So take a look at your situation and see what makes sense on there. Like I said, it's not a normal year, and it's something to look at what you're doing. You want to make sure that your chairs are on board with what you're doing from the budgeting process. You don't want to set them loose and say, okay, I am the government relations chair, and our goal this year was to have an event, so I've already gone ahead and booked a room at the Marriott, and now we're going ahead and ordered a caterer and all that sort of stuff, because it's going to be a big success. You don't want them locking in expenses until you say, well, that event depends on us getting a sponsor for it, or we have to be flexible on that. So make sure you've got them in there before they go running off with their initiatives. Again, you want to use some prior year to give you some sense of history, but then you've got to go back and say, this is different, and we're going to adjust accordingly on this. Be conservative. Always look at, don't have rose-colored glasses on your income side, but maybe give a little bit of cushion to your expenses on the high side, so that you don't miss. So when you don't miss a goal, all of a sudden the impact isn't as big. So give yourself some wiggle room and some cushion to help that. And again, like I said, there's a contingency item that you're going to have, because there's going to be some kind of inevitable chaos, and we've already started hitting that. So there's going to be a lot more of that as well. Any questions on these?
I just have a quick one. Well, it might not be quick. So like the surplus thing you mentioned on the district level, and sort of waiving fees for the clubs, as was y'all's way of sort of addressing that. It seems like this year could also potentially lead to a situation like that, in the sense of we get our income in the front end while planning on the back end of potentially still having like a gala, where we might have another year of a surplus. How would you recommend, sort of on the club level, addressing the surplus from last year, which, our surplus was like, I don't know, like 20% of our operating budget.
Okay. It's, look at two things. One is, if you've got certain programs you want to do that you've had a problem, getting sponsors for, or whatever, maybe take that and help fund an endowment to keep that, keep those programs that are important and funded for the future. If it's like a diversity mosaic scholarship or something like that, you could say, okay, we'll take advantage of that and put that over there to help fund that there. The other part could be, maybe you set up something to help members that can't renew because they lost their job or something. You may turn around and, say, we're going to put aside something around there, or some way to invest back in your membership right now, because obviously this is going to be a year where, we're all strained by that. So either way is, there are different ideas from that. Like I said, I always like investing long-term in there, but again, if you've got short-term pain and you say, okay, our membership's down 20% because, 20% of them, they've either lost their jobs or their freelance work is down so low, then look at that and say, okay, are we going to maybe we give some scholarship money to memberships this year, or give them, half priced or whatever, because especially those they're going to be affected by it, they're going to need AAF this year more than ever. They're going to need support from their industry teammates and colleagues. And so ways that we can keep them involved in part of that, I think, will pay off in the long run.
Okay, cool. Thank you.
Mm-hmm. All right. So now you've kind of put together a budget. Now what do you do with it? Again, if it's not reviewed and used, then it's no good. It's not, especially now, there's not a piece of paper that you check off and say, okay, we got a budget. Nobody knows what it is, but we did one. It's important to use it and have it reviewed. You need to have the whole board look at the budget versus actuals every month. It's important for the board to understand the financial health of your club. A lot of us, we have a lot of clubs that are very tenuous and that run, year to year, and that don't have the ability to have surpluses and advantages like that. So it's important that the board understands where that health is. And it's going to need to be reevaluated each month. Do we know something different now than we did in last month? Do we have a situation here where there's, the professional development luncheon or whatever we're going to have is now going to be virtual versus in-house? So is that going to affect either what, extra tickets are going to be there? It's going to affect food costs, and make adjustments on that so that you can keep that up to date. And you can use software, QuickBooks, places like that. You can, help keep it over the budget. There are lots of different tools out there. So, it can, or you could just do it on Excel, whatever's easiest for you on there. This is just an example of what we use in QuickBooks. This is our latest budget for District 3. And obviously we haven't spent much money or had much money coming in right now. There's not been as much activity after only a month. But in there, it'll compare our actual to our budget each time. It'll tell us where we are right there and what % of our budget we've either spent or had come in. Now, things to keep your eyes on financially that you want to make sure that you stick with. Collections. It's easy to bill and say, well, it's okay, it's income now because we've already billed everything. And then 6 months later, you're like, well, these people that we billed their membership dues that they never did pay. Or we thought we had a corporate sponsor and it's out there. So you got to keep on top of your receivables and have those conversations with someone and say, hey, can you give me some update status on that? The hardest thing to do is to try to collect someone's membership in March. When at that point in time, their incentive to pay it is like, I've already gotten the benefit of the year. What do I care now? And, we all have those laggards that do that. A lot of people wait until the ad entry, the American Advertising Award entries are due, and then they'll try to join at that point in time to save the money. But you want to make sure you stay on top of that so it doesn't get out of hand and someone just decide to opt out. Contracts are more important than ever. Make sure you look at the clauses about cancellation fees. That'll say if you don't cancel within this amount of time, then you lose your deposit, or you have a non-refundable deposit by committing to this. So make sure you look at those that are in there, because they're going to send you their contract written by their lawyer, and it's going to have everything to their advantage. Also, watch out for the force majeure clauses, and those are when they basically say, and those are being used right now, where someone will say, well, something like coronavirus really falls underneath this, and it's an act of God, and it's something that was not controlled, so we won't let you out because of that. Right now it seems reasonable if there can't be a live conference that they'll let you out of that, but some of them are pulling these clauses in there, and I know Marriott at one time was pretty strict on that. That if they want to call this some sort of act of God or something in there, that you are still responsible for whatever for fulfilling that contract. Look for minimum revenue, and what that means is, and I'll give the example of the district conference. When we plan at a hotel event a year ahead of time, they will say, okay, we'll give you these rooms and this price, but we want to make sure that you have a minimum of 50 rooms booked for 2 nights. And if you don't, then you will make up the revenue if those bookings don't come in. Or that, we're going to allow you to have this benefit, but you're going to order X amount of food. And so when that happens, you want to make sure that, look at it, what's reasonable, and say, okay, what happens if we don't have as many people as we did last year? So don't just re-sign the same contract that you did the year before. Look at it and say, okay, I need more flexibility for this right now. or we're not going to be willing to guarantee the minimum amount that we spend with you. Does that make sense? All right. Another part is committing money that hasn't been raised. And that is, we're going to do, we've always had, we feel like we're going to go out and get sponsorships for something, but you go ahead and commit to spend money on something that you haven't had a chance to raise it yet. That may be a scholarship, that may be certain events or other programs, or part of your public service that you go ahead and say, okay, we'll go ahead and enter in this, but we haven't raised the money for it yet. You want to be very careful about that right now, because raising money right now is a tenuous situation, and you want to make sure it's in hand before you've already gone off and spent it. And again, what I can't reiterate more, no matter what, your budget will be wrong. So you've got to reassess it each month and then play with your assumptions and look at that. And look at the worst case scenarios and then plan accordingly. So contingency plans are important right now. You've got to be nimble. You've got to be able to react quickly if something that you're counting on doesn't happen, and be able to adjust on that so you don't get behind. And then these are normal things. This is not just in a year like this, but it's all the time. And we stress on this, but the price for not doing it right is pretty consequential. Taxes and legal issues. Again, while clubs should not owe taxes because they're, an association, not-for-profit association, they still have to file a tax return every year. It's a Form 990. And I can't tell you how many times I've said this, and then somebody will come up at the end of the year and say, well, we didn't know we had to pay taxes. We just thought, our club was different. And everybody has to do it. Again, there's usually no money sent in. It just has to be done. And then rather than put it off, preparation by a professional should cost you about less than $500. You can usually find a CPA that'll do it. And if you give them the information easily, it won't cost that much. Normally, these returns are due by, I think, November 1st, either November 1st or November 15th. And so that'll be, most of us, I think, have a year that ends in June 30th. So that gives you 5 months to prepare for it. So it should be plenty of time. The only thing is, when you get a new treasurer in each year, and the first, it may take them a while to get adjusted. So make sure they understand that this needs to be done, so that all of a sudden they, well, nobody told me that. I didn't realize we had a tax return due, and I just got in office. The other thing is you got to check with your state laws, because a lot of not-for-profits have to be registered with the Secretary of State and file their 990 with them. And so failure to do so, they'll end up sending a fine or something along those lines, or try to jeopardize your status. So just stay on top of that and make sure that that you comply with what those needs are. And we've run into that several times ourselves, where they say, well, nobody filed, and along that. The other thing that I've run into a couple of times is that when you have things that where we raise some money, all of our fundraising is done by our members. People that are joining, they do that. But sometimes a Secretary of State's office or something like that will look at it and say, oh, you're fundraising to the public. You have to file a different way, and you have to, pay this fine, and you have to do this special report. So talk to your accountant to make sure it doesn't look like you're fundraising from the public, so that you don't end up kind of going askew that way.
David, another thing that we have seen the past year in the Midlands was for a certain venue, we had to register the club. We had to apply for something so we were covered insurance-wise to have alcohol at the event. And now our club is registered with something else with the Secretary of State. But every month we now have to go into the system and register $0. And we're basically getting administered an admissions tax that doesn't apply to the nonprofits. But there are huge fines if we forget to put in our zeros every month. So just something to watch out for if events require you to carry some sort of insurance certificate or something. Is we got a nice letter in the mail saying we owe the state $2,000.
Yep.
When in fact it was just a misunderstanding. but it took about 8 months to figure out.
Okay. Yeah. I mean, that can be tricky when you get held up like that. And you know, once they get their hooks into you to sign up for something, then they'll be all over you for complying with that on a monthly basis.
Yeah.
And I'll talk about some of the insurance things that kind of deal with that as well. So we'll talk about insurance now. Key things, and one of them kind of related to what Sam was talking about. So there are two types of insurance that you really want to make sure you have. One is a liability policy for your club, and the other is a directors and a D&O insurance policy that protects your directors and officers so that they don't get sued directly or individually. One of them protects the club, like if somebody gets hurt in an event or does something like that, and the other one of them also helps against two different things. One is it helps against suing you as an officer, but also they can also help protect you if your treasurer embezzles, or if you've got some kind of thing going on there like that, then that can sometimes protect you as well. I know when Roanoke had their issue, that's one of the things that they were trying to utilize to help offset some of the losses they had in there. The other thing to look at, this is related to what you said, Sam, a little bit, is on event venues. Look and see what the clauses in there are about insurance. Some events will have the liquor license themselves, so you don't have to go apply one. Some of them will also have they'll have coverage in there that's being done, but you want to look if they say, well, we don't have any insurance coverage, and so you have to show proof of insurance along that. It's just something you want to look at to make sure that you're not exposed anywhere. Financial controls. So I can't underestimate the importance of this at all, because no matter what we think, this always becomes a key component. So some of the safeguards you want to have in place is, again, you want to have the monthly review of financials by your executive committee. You want to share your financials with the board, and you want to have a board report on that, but the executive committee needs to look at everything in there. It needs to see the monthly bank and investment statements. And while that seems like boring detail, anybody can produce a spreadsheet and say, this is our finances and everything looks great. But if you really want to see what the money's coming in and going out, you need to look at the monthly bank, credit card, investment statements, because that's what shows what's being written and who it's going to and what have you on there. It's just a safeguard so that somebody actually looks and says, okay, were these expenses that we reported on our income statement, were they the expenses that we saw going out? So that's why you want to see, these are all the checks went out. This is who they were made out to. This all looks reasonable. This all looks like it's where it's supposed to be. Here's the credit card statement. These are all legitimate expenses on there. One thing that people will say is a pain in the rear end is two-person signature on all checks. Again, that makes sure that one person doesn't have the checkbook all the time, and that no one doesn't become accountable. And maybe they made a check out to their own credit card company that's the same as the same as the club credit card, and nobody knows the difference. They just assume it's right. Or food and other things that they go out and say, well, this was an expense. Also, credit cards. If you have a credit card, I don't recommend having multiple, lots of the cards going out to the different officers. That almost invites a ask for forgiveness, not for permission type mentality. And someone can easily come back and say, oh, yeah, well, I had a meeting with the chair, and so we had drinks, we had dinner, we went to a movie, we went and, did a lot of things, but it was in the interest of the club. So you want to make sure you've got a pretty strong control over expense reports on there. You also want the credit card bill. You don't necessarily want it to go to the same person that's using the card, because you want somebody else looking over and seeing what the credit card charges were for that month. Again, treasurer presents the financials to the board each month. It's reviewed. And usually people say, well, this is the boring part. This isn't, the interesting part. But financial strength is one of the most important components of clubs, especially in today's environment. So you just want to make sure that everything's clean and transparent.
Is that why I never got the credit card?
Exactly. it never got, never will. It's right here. All right, so in summary on this, we talked about having a budget, the importance of a budget. A budget is a guide, it's a plan. It's something that's important to follow, to go through there. You're going to have contingency plans for that. It's going to be wrong. It's going to need to be changed. It's going to need to be updated. So make sure you're in a position to do that and being flexible. Check your insurance coverage. Make sure it's in place. Again, if July 1st is the beginning of a new year for most of us. So that's a lot of times when these insurance plans renew. So, there could be an invoice that's out there that may have gone to the old treasurer or maybe sitting around somebody's office. Just look and see and say, okay, hey, do I know when our renewal date is, and is it up to date right now? Review all your contracts. Just look through them to make sure that everything does not expose you to any type of expense that you can't handle, or that causes you to have to pay money that you didn't actually have to spend. Make sure there's not any of these gotchas in there that put you increases your liability. Following up on all your outstanding invoices. Look right now, since it's a brand new year, look and see, is there anything that was not paid from last year? Because the problem is, if you took it as income last year and you didn't get the money in, and you end up having to write it off or something, then that sets you in the hole for this year. So you want to make sure you have a clean slate on that, and that anything, especially from last year, is already cleaned up, and you stay on top of it during this year. Monthly financial reviews, it's important to have those. It's a form of transparency. It gives everybody confidence in the way how the club's being run, and it provides it also helps provide a guide for succession when you get a new treasurer in, so that they know clearly what the financial health of the organization and how you guys do things. And by the way, did I mention do your taxes? Please do your taxes. That's important. So right now you got to be gathering the information to be able to put that together for your accountant, so those can get filed before the November deadline. Any questions?
So David, we did have one question, and that was for clubs that maybe have two accounts. So maybe they have a money market and they have a checking account, or if they're a club that is looking to start a money market account, can you serve as maybe a resource to them in guiding them on those decisions?
Sure. And, one of the things to look at, the district has a money market account that is built up to try to one day endow some of the NSAC competition. And one of the things to look at is long-term, what do you want to do with that? Because there may be some investment decisions you want to look at as to how, whether or not I want to keep it in a money market fund, or whether or not I may want to invest it if we're going to try to build this over 5 or 10 years, or areas like that. It's an easy thing to do, but it's something to look at. And it's always good to have, if it's a money market fund, it could be a, rainy day fund or something like that can build up towards some future goals and areas that you want to invest in. So that's important there too. But if I'm glad to help anybody that wants to look at setting up something like that.
Thanks, I appreciate that. That's us. Because I was never in control of any of. I didn't want to be. I always had a treasurer say yes, no, yes, no. And that worked for me. I was fine. Do I have enough money to do this? And they were telling me. So I just checked, because we have 2 accounts. One account helps run our club. You know what I mean? For just normal club expenses. Right. And then the second bank we have money at has a, one bank is, the second bank also has a checking account with about $1,500, and then we have a money market with about $8,000 in it. And it was just put there as a cushion because we had financial problems when I first became president. There was someone had screwed up funds before, so we you know, just got real thrifty and didn't do any, you know, and so we have that there sitting there. But even in our working bank account, it's like, you know, about $8,000, which is why it was no problem for us to like pay for judges, you know, be like,
Sure.
yeah, sure, I'll just do. So I just want to make sure we're making money and it's not just sitting there. And I did speak with my banker, and he did say that the CDs aren't yielding the same as the money market. So,
No.
okay.
The other thing to remember as far as the financial health is that we ran into this one year. You know, you may have a pretty decent checking account. I mean, you may say, okay, we've got some money in our bank account. And so, you know, that's not necessarily your source of revenue for your budget.
Right.
So just because, you know, for you holdover, let's say you got $5,000 in your checking account, doesn't mean, oh, look, I have this new revenue of $5,000.
Yeah.
Usually that's to help you get you through some things. In the beginning of the year, if you have a kickoff, or if you're coming to the district conference, or you've got other expenses like that, that helps seed that, but you've got to be able to plan to get that back as well. So that's not necessarily saying, oh, good, our revenue this year is going to be 5 and our expenses are going to be 5, but we got 5 over here in our checking account, so we'll just spend that as well. One is you're screwing over the people that are coming behind you because you just took away any of their seed money and their cash flow money of that. So that's an important thing to note as well.
And we recognize that the American Advertising Awards is the largest is the primary fundraiser for clubs. So
yeah, the three main sources of revenue that come in there are membership dues. I mean that's a key component of it, and then your American Advertising Award entries. And then usually, you know, some of your galas or things like that also bring out a great deal of revenue. So it's important to look and see what those 3 pots are, and then look to see how they may differ this year so that you can plan accordingly.
Okay.
And then kind of add to that, one thing at the district level we had to do was revise sponsorship packets so that they fit, they offer value even at a virtual level. So a lot of our sponsorship packets are really made for in-person events, and that's where the value is. So you might want to look at those packets and see how you can revise them. If you go to the district conference landing page on our website, we have a sponsorship packet on there that we made for this conference, and you can kind of see how we switch things up to offer things at a virtual level kind of value. So it's just something to keep in mind. And then David, in addition to kind of being a resource, if a club has a budget and maybe it's not approved yet, or even if it is approved, can we at the district be a resource to kind of look over those budgets and kind of offer any kind of suggestions that we might have?
Sure. I mean, I know Tiffany will be glad to go through them all line by line and come up with good suggestions and ideas and do an audit trail on it. You know, and then now, yes, if you want me to look at your budget or just say, hey, does this look right? Or push back on some assumptions, I'm happy to do that. We've worked with a couple of clubs before that were coming into some financial issues where they were, you know, the way their budget was being run, they were going to run out of money within six months because they were spending their checking accounts. And so they were funding it that way. And by sitting down and look at their membership due structure and how they were doing a few things, we were able to turn around and give them a slight surplus and you know, just a few tweaks like that would put it on there.
And Danielle, do you think that the virtual, your virtual packet you have now will work in Charleston market, or do we need
the one that we have is very specific to this conference, but I definitely think you can kind of tweak it for needs based on the virtual events.
Okay.
So that is all of the questions that I have. Lenza did post a link to the sponsorship packet in the chat if you want to kind of look at that and bookmark it. If anyone does have questions later on, please feel free to go to afdistrict3.org. All of our contact information is on there for Everyone that has a seat on the board, don't hesitate to reach out to us. We are a resource. We are a board that is made to help you as local club leaders. So with that said, we will wrap this up, and hopefully I will see all of you on the 12:30 keynote with Yash Bendayan. And Tiffany, if there's anything you want to add to that.
No, that was it. This was very, very resourceful. Thank you, David.
Good. And for those of you that were afraid to ask, I'm a Libra.
Okay, and with that, goodbye.
Y'all were wondering.